Hi everyone, today let's talk about Berkshire earnings. They are always a good bellwether to look at, with Warren Buffett giving us his guidance on what he thinks the market is going to do. Of course, he is one of the best investors of all time, and we should always listen to what he has to say. And then of course, we'll take a look at all of the charts and data as we look for where we could be going next week. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So Berkshire operating margins dipped 4% as the conglomerate braces for tariff impacts we've been talking about. Tariffs for basically forever, it feels like. All year we've been talking about tariffs. Income dropped to $11.16 billion for second quarter, which obviously is still a ton of money, but not as good as what people were looking for here from the conglomerate. Cash hoard is just a little bit lower than the previous at $344.1 billion. $347 was the all-time high, so still tons and tons of cash on the balance sheet. Berkshire still waiting patiently for lots of deals in the market, which will come eventually. Just got to be patient and look for that down the road. Of course, he is one of the best ever, and if one of the best ever is still sitting on a ton of cash waiting for markets to go lower, it's definitely something we should be doing at least a little bit. Berkshire was a net seller for the 11th quarter in a row, so they have been selling equities for a long time now, almost 4 years straight, dumping another $4.5 billion in equities in the first 6 months of 2025. So did not buy anything in the first half of 2025, even as the shares declined more than 10% from record highs. So that's a little bit surprising. I thought he would have bought something in those areas. I definitely did buy some stuff in there, but again, one of the best to ever do it. Not buying things, still thinks things are expensive. Definitely consider that as we go forward in our trading. Looking at fear and greed, we finished the week at a 50 here, down from a 73 a week ago. Big steps down, big rollover here. Did get below this kind of midpoint here in June as well, so everything looks a little bit more bearish. Momentum into fear. That was the first metric. Put call ratio also entering fear. Volatility stepping above that SMA, so broken to the upside, also signaling some fear. And then safe haven demand and junk bonds both signaling fear. This week, still expecting this to roll all the way into extreme fear before we see a major bounce. Moving over to the sentiment survey here, you can see the bulls actually stepped up. This was taken on the Thursday. I would guess this is going to be much lower next week. We didn't see all that Friday price action. Even the Thursday, we did see some selling, but you saw neutral get squeezed a little bit, 29 to a 26. Bears still at the historical average pretty much. So plenty of room for this to fall, in my opinion. Once we see the bears hit kind of the 40 to 50 range, that's where I would expect to see at least somewhat of a bounce. But for now, still plenty of room here, and I would expect that to happen over the next 2 to 3 weeks. Moving over to seasonality for August, we have already started this, but it does look quite bad here through the midpoint of August up until that kind of third week options expiration. Downwards price action, bearish through the 19th, 20th time period, and then we start to pick back up to the upside. Average move is about 1.5%. Obviously, we've already done that from the peaks, but I do suspect we will be going a bit lower, and that is the seasonal preference as well. Then looking at the calendar, we talked about this. The first day was the Friday, and that was supposed to be bearish, and it was. Average gains in August for the last 21 years are 0.02%, up 12, down 9. One of the worst months of the year. NASDAQ up 12, down 9. Again, one of the worst of the year. Monday of options expiration week out to the 11th is a little bit bullish. Options expiration itself is a little bit bullish, but week after expiration, up 21 of the last 34, pretty mixed here since 2005, up 10, down 10. So really mixed markets across the month and relatively bearish in my opinion. Moving over to the earnings calendar, Berkshire here over the weekend, they did talk. Their operating margins went down a little bit, not super great for them. And then for the week, Simon Property, like to watch those real estate companies. AMD for the Tuesday, Caterpillar, Pfizer, Duke Energy. That's going to be interesting. There's a little bit of talk around Pfizer and the administration trying to cut drug prices. That's going to be interesting. Marathon Petroleum also there. Yum Brands, Super Micro also in there for the Tuesday. Wednesday, McDonald's, Walt Disney, Uber, Spotify, quite a few companies out there. Realty Income, definitely a stock that I own in my dividend portfolio, definitely one that I watch on a regular basis. Occidental Petroleum, another oil company. Then for the Thursday, Gilead, Eli Lilly, again, some of those companies that are under pressure from the administration. Datadog for one of those growth plays. And that'll pretty much wrap it up here for the week. Nothing really big on the Friday. Moving over to the economic calendar, basically nothing for the Monday, really very little here for the Tuesday. Services PMI, interesting. ISM non-manufacturing PMI, all of those are expected to be above the 50 line, so slightly better numbers than we saw previously. Initial jobless claims for the Thursday, that's pretty much the only thing there on Thursday. Wednesday, just the FOMC. Remember, daily speaking, usually after the FOMC meeting, they do have a couple of job owners out there talking and giving a little bit more information than was maybe initially thought, giving a little bit more clarity on the comments, and then 10-year note auction there as well. Fed balance sheet, interesting, and then the Friday, pretty much nothing at all. So very little data and not a ton of earnings left. So markets are likely to do what they're going to do on a technical basis, which right now is slightly bearish. Moving over to Max Pain, about 600,000 options, 1.6 on the ratio, quite a bit lower than we've been seeing. Max Pain is at 633, so a little above the market. Haven't seen that for a while. Put wall 610, so about another 2% or so lower. Call wall 640, lots of room to the upside. Put wall here kind of 625, and here kind of makes sense. Really as high as 630 is possible, but really I think this could go a bit lower. Anywhere in the kind of 612 to 615 area makes sense for me. Maybe we dip into this range and then bounce a little bit from there. Either way, you have a pretty wide range between these major peaks. Moving over to the charts, starting off with the S&Ps, you can see down 2.36% for the week. Momentum stepping back to bearish. We had one bearish week, got a resumption week, and now we are back to bearish here right towards that SMA. Is it going to push through there? I would suspect we are at least going to retest the SMA on the RSI, something to watch for this week. When does it get that touch? And then do we see a bounce from there? Lower high setup and then the bigger breakthrough, I would suspect that is likely what we'll see. On the weekly, you also have that 9 EMA in here around 61.75. From current price, that's only about 1% lower because of the big move that we had. Do we come down and touch the trend line? That would give you about 1% and a third, 1.5%, somewhere in there to that next zone. And then you have the highly traded zone, this consolidation area, pretty much in line with that zone here. So anywhere between 61.33 to kind of 61.50 makes sense to me. And then I would suspect we'll probably see a bounce, get that longer term topping pattern, something more like this where you have that initial move down, a couple of consolidation weeks, another maybe move down, a couple of consolidation weeks before you get that bigger move down. Need that full topping pattern. You had kind of a double top here, maybe a triple top, depending on how you look at it. One down week, I don't think is going to break the markets, but I do think in the short term we'll have at least a little bit of follow through before we see that kind of resumption to that topping pattern and then the bigger breakdown. Ultimately ending up in this kind of 5,800 area is probably what we'll see. 55 EMA in that same area. That'll trend up over the next couple of weeks, maybe to 5,900 into this trend line area, 6,000 or so. Either way, everything is still a little bit bearish here for the short term. And then looking at that daily chart here, you can see gap down and fall, the next level, 670.90, and then you can see that 55 EMA there, 608.73. That's what we're looking for the kind of low of the week. I would suspect is into this range here, touch that trend line. Then we'll start to see that kind of bounce. This would be your midpoint here. Do we get the lower high, double top, something like that, kind of mid to end of August time frame, and then we get that kind of fall into the September-October time period. That's what I would suspect is going to happen. So just because this is going now doesn't mean it's going to be straight down to that ultimate low before we see a bigger bounce. I do believe we still need a true topping pattern. Moving over to the Tasty charts here. For that weekly chart, you got the trailing stop in the 575 to 587.30 area. That is what I suspect is going to happen. That does take us a little bit lower based on the previous charts. That would also take us below this structure here. That would take us below the 9-week moving average there as well. Even below the 21 would be a little bit interesting in my opinion. I don't necessarily believe we're going to make it all the way there, but something to consider. 587.31, that weekly trailing stop, still holding bullish conditions. Of course, didn't quite make it to the upper band like I thought we might. And structurally on the weekly chart, of course, this is not broken yet. Something else to consider there. Big volume, of course. And then looking at that daily chart, this did flip into bearish conditions on the Friday session. So first time we've seen bearish conditions for a very long time. We got into bullish conditions back here on 1 May, and since then it has been straight up from from there. Now we're into bearish conditions. Market's showing some reversal, definitely some volume saying this is going to go lower. Lowest ATR band 613. So again, about 2% lower from current price. Hit that area, hit this kind of 55 EMA area, and then bounce, get that broader topping pattern, and then the continuation down to this kind of 591 area is most likely. I don't think we're going to go straight down here, but you never know. Sometimes it does happen that way. Either way, short-term bearish, look for the bounce, look for the broader topping pattern. Moving over to the NASDAQ charts here, you can see we hit that upper trend line almost to the penny and then immediately rejected very powerfully from there. The last time we saw this was 16 December. We got a couple of weeks of choppy price action. We did go lower first, hit that 21 EMA. I don't really believe that's going to happen. That would take a lot of room here. You can see the 21 EMA was down about 4% when we got that down week, ended up being about 3% lower. Right now, that 21 EMA is all the way down about 8% lower from here. So that's just how extended we are. Over the coming weeks, I think this could come up to maybe 5.5 to 6%. Maybe in here makes sense. Gives you kind of middle of the range here. Something to consider, but we're super extended, which means there's a lot of room to fall. Also something to consider. 9 EMA in there at 22,478. I suspect we'll at least touch that, and then we'll see what happens. Do we get a bounce like this in here a couple of weeks before we get the bigger breakdown? This feels like a long topping pattern. This was partially around the election and the inauguration, ahead of all of the tariffs, of course, but this is not a good sign, right? Hit the key level, rejected from there. That ended up being the high as well. You can see markets did make it back up to that level before we saw the bigger breakdown. Either way, everything says bearish from here, in my opinion. And then looking at that daily chart here, you can see we're already through the 9, through the 21. 55 EMA is that support that I'm looking for around 540. That would take you down about 2.25%. That could absolutely happen in a short period of time. Next support below that would be 538. So somewhere between 538 and 545 is kind of the range that I'm looking for. Maybe we come as far down as this previous peak and then bounce from there. That seems a little bit far. I don't think we'll make it that far, but either way, in here I think makes sense. And then we'll kind of get this broader topping pattern from there. So just something to consider. Everything does look a little bit bearish, but I don't think this is going to be the kind of final move here. I still think we need that topping pattern. Moving over to the Tasty charts here, you can see we came up just short of that upper ATR band. That was 580. I thought we would get there, but we just came up a little bit short. High of week was 574.63. 8 EMA sitting there at 547.90. That is going to be your initial support. Kind of like we did here. Did chop there just a little bit, ultimately going down to that 21 EMA. Do suspect we'll at least overthrow to that previous high in that kind of 540 area. Again, current trailing stop 515.97. I don't think we'll probably make it there this week, kind of similar to this, where this kind of hovered a lot lower. Consolidation eventually did go to that level and then flip to bearish conditions. That is likely what I think is going to happen. And then looking at that daily chart, we did flip into bearish conditions, just like we talked about. On the SPY charts, bearish conditions, first time we've seen that on the NASDAQ charts since back here in the kind of end of April timeframe where we flipped to bullish. The first bullish week was 1 May, same as the SPY charts, and then we got that bigger continuation to current price. Usually when you get that flip on this metric, it is pretty good in terms of telling you when to stay bearish and when to stay bullish. And now this is a bearish indicator here. So even if we do get some kind of retracement rallies, some kind of topping pattern, I would suspect that the top is in from that Thursday candle. Moving over to the Russell here, big down week, 4.2%, big move, momentum bearish, RSI bearish. We're right at the SMA on the RSI. Did get a little bit below it technically. VWAP holding as support 213.41. Does this area hold? Do we get the topping pattern? Does this go all the way to the 21 EMA? Remember that the Russell is a little bit more volatile. It's also a little bit weaker. We're not anywhere near all-time highs the way that the SPY and the NASDAQ are. That was all the way back here in November. We've been downtrending really ever since. And you could also argue that this is a high, lower, high structure in here. Either way, high, lower, high, lower, high. Didn't quite get to the wicks. That level was 299.18 in here, so we didn't quite get there. Then we pulled back already. Structurally broken, of course. Broke the trend lines here. Broke that 9 EMA VWAP in there, 21. Likely to be that target around 205. That would give you about 4.25% lower, very similar to what we saw here. I would suspect we're not going to close anywhere near that. I do think we'll see a candle wick to that area and then probably finish kind of in the middle of the candle between 208 and 211. So look at that as a potential buying opportunity in that 21 EMA. That is one of my favorite setups. if it ends up being that way where you get a massive breakout above the 21, come back, retest the 21, holds as support, that would give you a nice potential for upside. And if that did happen, I would likely expect a test of at least the all-time high in there around the 244 area, in that 241 to 244 area. But of course, that's all speculation for now. Either way, this is what we're dealing with, and I think that's the region we will be in this week. And then looking at that daily chart here, you can see below the 200, that's a big bearish move for most people. 144 EMA to 10 also in there. Remember, the range we were looking at was kind of this 205 to 211 area, so in here makes sense. Right now, 214 is holding. I don't think that's going to hold. I think we'll go to here at least. Highly traded zone there as well. So lots of indicators in this 208 area. Moving over to the Russell here on the Tasty charts, you can see we did get to that trailing stop, overthrew it 2 weeks ago, and then tested that same area. Second ATR band was still resistance 226.09. Could not get above that level. Tested it 4 weeks in a row and then broke down at that area and then back into the middle of the range here already on the weekly chart. Current trailing stop 196.32. Again, I don't think we're going to get there in the short term. And then looking at that daily chart, we did almost get to that lowest ATR band already here on the Russell. It's been falling for a while. You can see almost 2 weeks of straight bearish price action considering this kind of consolidation range in here. And then you can see trailing stop right now 214.92, which is basically right where we're at. So technically still bullish conditions here on the daily chart. Not what we saw on the SPY and the NASDAQ, so hung in there a little bit better. The trailing stop was quite a bit lower than price as well, but something to consider. 211.71 is also that lowest ATR band. Suspect that that is going to be a little bit of support. That'll continue to downtrend here in the short term. Then we'll see a rally into that kind of mid-range, I would suspect, somewhere around 220. Get the lower high set up and then that bigger continuation down to that lowest ATR band. That is what I'm looking for now. Very similar to this, right? Just in the inverse. So you rally up, get the pullback kind of mid-range, get the rally back to that upper ATR band. That's what we're looking for inverse wise. Got to the lowest ATR band, mid-range, fall back to that lowest ATR band. Moving over to the Dow charts, down almost 3%. Next level 432.78 is that zone. You can see middle of this kind of topping pattern here. You could argue this is kind of a triple top. We did get above it on a technical basis. This already kind of looked like a double top kind of internal, but if this is a broader pattern with a bigger double top here, that would put your mid-range in here, which would be quite terrible. I don't really believe that that's going to be the case, but either way, in the short term, still looking for a push down to this kind of 430 area, at least 1% lower. And then you got the 55 EMA pretty much in line with the 21 EMA all the way down to this kind of 420 level. My level for 1838, this consolidation low in here, I think is probably a zone that would be in play. That would be around 3.5% lower, maybe not. 426 also in there at this consolidation high. Moving over to the equal weighted S&Ps here, you can see this was a super clean double topping pattern. Not what you want to see there either. Almost to the penny here. You can see November timeframe right in this kind of 188 area, came to that level once again, 188 area, and likely to fall here. You can see even in this topping pattern, we got all the way down to 174 from here. Cutting through these zones over the next couple weeks is what we saw. That would give you about 4%, 4.5% lower potential, and then you get a topping pattern, and then you get that bigger move down potentially. Somebody definitely knew something ahead of this Liberation Day fall, and then the 200 sitting all the way down there around 157.66. I don't necessarily believe that we'll get there, but can absolutely do it. You can see a big down week here, 8.5%. Certainly a possibility, but structurally that was already broken here on the SMA. We haven't done it yet. We're right pretty much in this range. We could still see that lower high, then the bigger drop after that. Moving over to the ratios here, the ratios showing definitely some mixed conditions. SPY outperforming the Russell. That makes sense. The Russell does not perform super well in these kind of conditions, especially higher rate conditions, which seems like that's what we're going to be getting here pretty much through the rest of the year potentially. And then NASDAQ SPY, NASDAQ did pull back. Still had a positive week, still got to that level 366, still cannot get above that level. If this breaks structurally here and we start to see tech lead us to the downside, that is going to be very concerning. RSI showing not quite broken yet. Does seem like we're in a bit of a topping pattern. However, this is kind of what I'm looking for on some of the other charts. Get into this zone, topping pattern, and then that bigger drop towards that 50 area. Momentum has been fading here for a while. We've been talking about that, but this does look like a bit of a topping pattern again at a critical zone. NASDAQ starting to potentially look for a break here. If that happens, we are definitely going lower, and I'll be watching for that this week. Moving over to the SPX divided by the M2 money supply, I do really like this chart as an indicator of where we might be going. And something really interesting here is that we are already below the high from February. That was 28.50. It came right to the critical level, sold off here. This level goes all the way back here to the .com time period. You can see February 2000, February 1998, and then here again, December of 2000. Critical zone there. That is where this level originated. Came right to it, rejected. We are back below it here now. 9 EMA still in there, 28.10. Does it get above here a little bit and then push back down to that 27.25 area? Remember, the key level to watch is this 22.05 area. Anytime we're above it, it usually does not last for very long. It's usually just a waiting game until we get back into that area. And going to the monthly chart just to give you some perspective. It's been a while since I've showed this chart in a kind of broader detail. You can see .com fall, rallied up to this range, 21 to 22, fell into 2008, rallied up, COVID, 2205, post-COVID high, 2021, again, 2205 to the penny, and then fell again. We cut through it here, rallied through, fell right back to the level, 2205, super critical level, and then rallied back up. Is this a double top in this kind of 2850 area, and then we fall back to 2205? I wouldn't mark it off. It's certainly not impossible, and this RSI looks terrible, absolutely terrible. Massive breakdown here, came right to the SMA rejection, and if this goes here, that is going to be awful for market. So just consider that. This chart is kind of screaming much more bearishness to come. Moving over to the Mag 7, you can see that massive wick rejection went right to that trend line. The one I said last week, I didn't think we were going to make it there, and then sure enough, we did. Sometimes markets just happen to be that way. Went right to the trend line, immediately gave it all back, closing below all the major levels. 341.42 was the high back here from December. The level 337.79 was the second kind of topping pattern before the big sell. And so far, we can't seem to close above those levels ever. And this week was no exception, so continues to look like a broader topping pattern. While we did close above this previous high here over the last couple weeks, we still cannot get above these wicks on a closing basis. Momentum continues to fade, RSI continues to fade here. So either way, I do think this will probably reject and confirm down. The 9 EMA is going to be 372.03. Moving over to Apple and Microsoft. Apple was down 5.38% on their earnings. Everything did exactly what we suspected that it would. We said this was the topping zone between 211 and 217. Did go a little bit higher than I thought it would over the last couple weeks, but just a tiny smidgen, never touched that high level, that resistance area, and then rejected from there. The low of this consolidation is between 193 and 196. I do believe we will get there. Do have some trend support in here for next week around the 199.50 area. 199.54 is a level. This is really just a range here, really between 194 and kind of 199.50, but I think we'll at least get to this mid-range. Momentum stepping to bearish, RSI stepping to bearish. Apple looks pretty awful. Maybe it even eclipses that low. The lowest dynamic support is going to be 191.50 or so, somewhere in here. That's the 144 EMA. And then looking at Microsoft, still closed positive on the week, 2%. Went much higher on their earnings, absolutely massive, and managed to stay positive when everything else didn't. So I would not bet against Microsoft here, but I do want to trade in the direction of the broader markets, which seems to be bearish for now. Moving over to Tesla and NVIDIA. Tesla was down 4.25%. We said this was going to happen. We talked about it pretty much all week. Breakdown, retest of the structure, breakdown, and we did get that continuation lower. Still believe this is going to go into the 290 area. Didn't close below my level 301.93. Do suspect that we will get below that. 21 EMA is also support, 297.38. Next level would be 280. If this 302 area goes, I think 280 is absolutely in play, especially because everything is so bearish. Momentum bearish, RSI bearish. And then looking at NVIDIA, shooting star kind of candle as well. Went way higher, gave it all back. Still closed positive. Again, not a stock I would bet against. Similar to Microsoft, but again, markets are likely to head lower, and I want to trade the weakest stocks to the downside. Moving over to Amazon and Alphabet. Amazon down 7.2% right to the level. 212.25 is the zone. VWAP in there as well, 214.36 right in this area was the rising wedge. Structurally broke down, followed through on the pattern. Earnings just pushed it in the right direction, as you would suspect. 21 EMA is your next support, 203.73, and then my level 200.55. Got some trend support below there around 197.50. This zone is where I suspect that we will go. Momentum stepping to bearish, RSI stepping to bearish on big volume. And then looking at Alphabet, this structure continues to be quite bullish, hit the upper trend line, pulled back as you would suspect. Lowest trend line is 183.90 or so. My level 185.22 I think will probably come to here at least. If this structurally breaks, the next level 197.42, and then you got some dynamic support in here between 174 and 175 to watch. Either way though, Alphabet looks a lot better, still holding this bullish structure. Moving over to staples and discretionaries, these looked pretty awful, just like everything else, down 1.64% to the support line. 79.90 was the support. You got this downtrend line also holding a support. It's been holding the last several weeks. Are we going to bounce from here or not? If we don't, 78.88 is the next level, probably going to cut through there and go to 77.50 if that breaks. And then looking at discretionaries, down with Tesla and Amazon, another lower high setup here, high, lower high, lower high. Do we actually get a lower low from here? I would say probably not. Do we get a higher low structure in this kind of 200 area? Absolutely possible. Do we get a kind of more topping pattern the same way we've been talking on everything else? I think is probably likely. Go into this kind of 207 area, find support, bounce, lower high setup, bigger move down into that 200 area, maybe a little lower into this kind of 189 to 193 area would be interesting. Momentum stepping to bearish, RSI stepping to bearish as well. Moving over to real estate and transports, both of these falling 3.5% and 6.5% respectively. Real estate falling off of that level 42.84. We said this was going to be a zone of resistance, and it sure enough was over the last 2 weeks. Starting to get close to a buying area. Anything really below 40 is likely to be a buy. Definitely would start to buy some in this kind of 39 area. I think is interesting. Momentum stepping to bearish, RSI stepping to bearish. This could absolutely fall down to the 35 area, so I wouldn't jump in too fast, but definitely start to buy some below 40 in my opinion. That's what I'm going to be doing. And then looking at transports, same kind of thesis in here. Broke this structure, 66.63 is the support. Trend structure below there around 65. Does this go to the 200? Around the 63 area, I think that's absolutely a possibility. And it looks very similar to some of these other structures. High, lower high, lower high. Looking for a kind of mid-range structure in here. This consolidation low back here was kind of 62 to 63 or so. If we did get a fall into that area, that would be about another 5.5% lower. So definitely some potential for this to fall quite a bit more. And if transports are falling, the broader economy is likely to be pulling back as well. Moving over to Breadth. Breadth went much lower as we suspected that it was going to. We had this kind of topping pattern. We took out this midpoint here. I think this likely goes at least to the 16 area. Trend support in here around 18.20 or so. Momentum bearish, RSI bearish. Want to see it come to here, similar to this, before we see another bounce potential, kind of like this move almost exactly. And then same here on 50-day. Long consolidation, structural break, momentum bearish, RSI bearish, expecting this to go at least to this kind of 32 area. That's kind of the midpoint. I don't really believe we're going to go as low as we did here. 15.15 maybe, but really kind of this 26 to 32 area I think is where we go, at least in the short term. And then looking at 200-day breadth, same kind of thesis, long consolidation, structural breakdown, looking for this to go to at least the 45.50 area, next level 42.26. Got this trend line here as well. Let's go ahead and extend that out. That would give you some trend support in here around kind of 46.70 potentially. Momentum, RSI of course still very much bearish, and I don't think it's impossible that this goes to the kind of 36.50 area, kind of similar to this where you get a bigger move down, a little bit of consolidation, and a little bit of a bounce before a bigger leg to the downside more ultimately. Either way, this has been structurally downtrending, so this could be a bigger move. Just depends on what that topping pattern looks like. Moving over to the dollar did go a lot higher this week as we suspected that it would. Went to that 21 EMA, went to the level 99.83, and then it pulled back to the middle of the candle. Stayed positive on the week. Momentum still bullish, RSI still bullish. I still believe this has a lot of follow through to go. I do believe this could go as high as kind of the 103 area. This is just an initial test. We've already had a bit of a bottoming pattern. Maybe we get a little bit more of that, but either way, I still think this is likely to go a little bit higher over the coming weeks. Moving over to bonds. Bonds did fall a little bit here for J&K as people are starting to expect a little bit weaker economy. This is likely to continue to fall. This is not something that does well in that environment. And on the flip side of that, you got TLT with a nice move up 1.6%. This is risk off. People are looking for safety. I've been talking about this forever. I still believe this is going to go much higher from here. We did get a trend line break, which is interesting. Expecting this to go at least to 89.16, probably up to 90 or so before we see any kind of pullbacks. And then we'll probably see a higher low setup and then a structural push here up into this next zone around 95 or so. That's what I would like to see. So either way, TLT in good position. I've been saying it forever. Hopefully you've bought some. Not necessarily TLT exclusively, but these kind of bonds. Moving over to the VIX, got a big spike up on the VIX, broke that downtrend line we've been talking about for a bit now. Big push through here, 21 EMA there around 21.99. Does this push to 28 to the kind of 32 range? That's going to be interesting. Momentum stepping to bullish, RSI stepping to bullish. This seems to be a bit of a volatile time period as we head into the August time period, which I already said was kind of a seasonally volatile time anyway, but seems like the VIX is pretty well positioned for at least one more week of spikes here in bullishness. Moving over to my accounts, I was down about 0.8%, so quite a bit less than markets. Markets were down about 2.25 or so, just like we talked about. NASDAQ was down about 2.25, so markets were a lot lower. I didn't fall quite as much as that, but still would have liked to have traded a little better. In terms of positions, right now I do have some short calls, expecting that bearishness to follow through. Long dollar here, still expecting some more long dollar to go. That is a much longer term trade. And with the move on TLT and the break above the trend line, I think there might be some more opportunity there. So might look for a little bit of bullish TLT this week, depending on what we see in the price action there. Honestly, probably should have taken it into the Friday, but either way, that's what I'm looking at. Definitely risk off style trading, short equities, long dollar, long bonds. Let me know down in the comment section what you think of Berkshire Hathaway. What do you think of Warren Buffett sitting on a mountain of cash, continuing to sell equities for the last 4 years? Is that something that we should be doing? Let me know. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.